Hey, it's Richard with Matthews Wealth Management here again. It's actually mid-February, and I'm really late getting to this. Sorry, but we're going to cover January 2024 market update. First quarter meetings are over. They went really well, and yeah, let's just dive right in here. Asset class performance. First thing we're going to hit here is NASDAQ. And I'm just doing a year to date, right? I don't think we need to rehash what 2023 was, but yeah, so far so good until, a couple days ago. That was rough as well. I mean, just so y'all know, everything is based on the Fed pivot. Surprise, like it's 2021 again or 2022. Just crazy. That sent bonds through the roof at the end of last year, by the way, which we were right about. And then there's been a bit of a pullback in bonds at the first part of this because, soft landing narrative, whatever. I'll get into that in a bit. But yeah, just up 5.24% year to date on NASDAQ. Interestingly, 5.54 on S&P 500 year to date. Same kind of shapes, less of a fall off there. But yeah, so weird. We got some parity. It's not just the Magnificent Seven, which, gosh, what a stupid term. But anyway, we're going to call it that. Let's look at what the 50-50 portfolio of a moderate risk looks like. Not good. 0.24% year to date. Very odd. Bonds. Bonds pulling back are basically what's triggered that. You can see the big bonds and then not really recovering the way that the S&P and the NASDAQ did. So let's talk numbers. Ooh, that's not parity, is it? Well, it is if you're talking large caps, right? The big companies are doing great. Specifically growth, the Magnificent Seven are leading the way. And then, man, small caps. Maybe we're not going to cut rates, and so borrowing is more expensive and smaller companies can't scale and therefore nobody wants them. There it is. That's what's driving that. So, and you got all sorts of free money flowing to the CHIPS Act. That was kind of cool. There's a lot of news recently. It's weird doing these. I don't know if I should be talking now or whether I should be talking up until like January 31st. So it's kind of mixed. But yeah, just, money goes where the government spends it. International, we've got a big negative correlation here. International up 0.5%, but then emerging markets tanking, right? That is interesting. That's not normal. We don't normally see that. And then here's the bonds, right? So year to date, long-term bonds, they've backtracked 1.5%. If you look at, I think it was like November through most of December, maybe mid-November through December, you had about a month and a half where long-term bonds went up about 15%, 12 to 15%, depending on the long term of it. And since then, the beginning of January and then current, it's pulled back, right? More than this, actually, probably more like 4 or 5% total. And so that's just, hey, is the Fed going to cut? And there's a lot of reasons why long-term bonds are kind of going to be the most volatile this year, I believe. Man, I should do a separate video on what I think's coming. I will. I'm going to do a separate video. But yeah, so the 1.5% pullback is annoying, right? For this is just through January, by the way. So January 31st is how I'm running these numbers. Up, 0, negative, right? So that's the big indicator, and it just has to do with interest rate risk, the inverse of interest rate risk. So remember when interest rates went up post-COVID and inflation, everybody's portfolios tanked because their bonds tanked, because nobody wants old cheap bonds when you can get new expensive bonds that pay good interest rates. Well, on the flip side, when they cut rates, bonds take off for lots of reasons, actually, and that's what I'm going to save for a different video. All right, let's get into commodities. Oil through the roof, 6.24% in the month of January. Gold down, real estate down, Bitcoin down. Bitcoin's back up. But anyway, yeah, y'all probably don't know my real take on where that stands. So let's look at year-to-date where we are. NASDAQ up 2.69, S&P 2.16. Moderate, this was, by the way, year-to-date as of the end of January. A moderate down 0.59. The thing I showed you at the very beginning was today, right? And then Matthews Wealth Management barely down, right? So much happier on that relationship, but going full risk pays. So that is that for asset class performance. Look for the other video where I tell you kind of what's coming up. And also we're going to do a QCD video today too. So check back, watch our videos, give us feedback. We do this for our health apparently. Anyway, see you next time.